Because we do have more on Disney with Tuna Amobi. He is a Standard & Poor's analyst with a buy rating on Disney and a $35 price target. Tuna, great to have you back on the program. And as Adam was just pointing out, it's going to be a lot about getting paid for content on Disney, what analysts are going to be watching. Is that what you're going to be watching for?
Sure. I think for Disney, always the bellwether for consumer spending. Obviously, theme parks is always going to be the biggest swing factor. So I think the last time management provided some updates, the parks were, the bookings were still down, but improving sequentially. I think that's the most important thing, that the trends are going in the right direction. So this quarter, we still expect that traffic trends are going to be relatively healthy, thanks for some really aggressive promotions that have been going on in the domestic parks. And also ESPN, the advertising trends there have been weak, and we expect that to improve sequentially as well, consistent with what we've heard from some of the other media companies that reported. And then on the ABC side, ABC arguably could be the highlights of this quarter. The scatter market is performing extraordinarily well, coming off of a weak upfront market. The drag should be the film segment. We don't expect the film to do well again.
Right. And I want to get to film in a minute, but I want to tackle the theme parks, because as you know, and as you pointed out, it is a very volatile part of the Disney, of the overall Disney results. Is there anything that management can do to stabilize it or make it more stable at all?
Well, they've been doing quite a lot over the past few years. They've done a lot of restructuring. They've shifted a lot of employees to variable hours. They've pulled a lot of levers that allow them to shift that business, which is still predominantly a large fixed cost business, into more of a variable cost base. Having said that, there's still some perennial concerns there with things like pension costs becomes still a factor of margin. So I think that the theme parks is kind of a long-term work in progress. But if you look at the past 6-7 years, I think the trends there have gotten incrementally healthier over at a very, very slow pace. But I think the right building blocks are in place to be able to continue to at least stabilize the theme park margins.
Hey, Tuna, people may not realize that Disney makes movies under a lot of different labels, from DreamWorks to Miramax to Pixelworks, etc. And there's sort of a rumor out there that maybe they're shopping Miramax. Any truth to that?
Well, I think there's credible evidence that indeed they are, shopping Miramax. I think this would be consistent with what Bob Iger spoke about, since he assumed office, which is a shift from films that do not translate well across various platforms to what are called kind of Disney-branded films. So think of a Pirates of the Caribbean that the company could, leverage not just in the film division, but across the various, properties, theme parks, networks, etc. So I think what we're seeing is that shift where, things like Miramax are going to be cut loose, and then they kind of Pixar in the house, and some of the other titles. Well, by the way, they still have DreamWorks to distribute, so they're kind of a little bit hedged too on the non-Disney branded films, if you will.
On that front, then. Okay, Tuna, we've got to leave it there.